Hey everybody, this is Jim at freechartvideos.com, and I'm still on the road, sitting in a hotel room, but this time I'm able to do a video, and since I'm here after the close, and yesterday, it was unfortunate I didn't get in till about midnight. So, anyway, here's a video for you. We're looking at the S&P 500, and this is an hourly chart. Before we get into it, I've got to remind you that this video is just for educational purposes. It is not intended to be used as any form of investment advice. So I draw lines on charts. You have to draw your own conclusions from your own research, due diligence, and make investment decisions that are right for you. So looking at S&P 500, it appears that between these two blue lines, we are forming a likely bear flag. Now, some folks are thinking that this bear flag is going to head down and bust out of the bottom, and that is a possible scenario. But it's also possible that that the flag heads down to the bottom, okay, and if it does so at the same rate of descent that it did here back in the middle of August, and we do this in a matter of days, and then a possible other rally could take us up to that neckline. And I'm kind of thinking, in a perfect world where things act as you would, quote, expect, that that could very well happen. And so anyway, that's just kind of my feeling right now, that this is a bear flag. These are the lines that define it, these two blue lines right here. And the question is, if this is legitimately the tag of this top line, now we go down to test this level down in the mid 1100s. What we need to be on the lookout for is, if that breaks, then a back test of that line, or it breaks and you're quick enough, then that may be a good spot to increase short positions. But if it doesn't break there, if it bounces, then you get a gift, and that is an opportunity to go short at the neckline, which is the textbook play. So let's look at a little bit different chart here. I want to look in a little bit more detail. We're going to look at a 10-minute chart. I'm going to show you some interesting things that have happened. And the first thing I want to show you is this. I've drawn a series of support lines. One of them starts back here on the 26th on that low, drawn here, and you can see that this little rising wedge, when it reached that line and broke, it came down fairly quickly, but then it firmed up, started to head up again, and then we formed this line as a line of support that I've highlighted. Came up, tagged the top line of the flag, came back, bounced on this line, then finally when it broke down, you could see a pretty swift selling pressure took over. That was yesterday. Today we rallied up on after some bad economic news. There was one thing that came in within range at 10 o'clock that gave everybody everybody became overjoyed, and immediately the markets rallied, and that essentially resulted in roughly a back test of that line. Okay, this line never did get back tested, but it just goes up at too steep a slant. So anyway, came up, then immediately we started selling back down. Now it looks like there is a support line that slopes down just a bit, and it's a little bit of a stretch to use this as a data point, but you can see that that was really where a bounce took place. And then we've got this line, and we got multiple attacks on that line the last third of the day today. So I'm thinking if that line breaks down, then that should be the signal that that the market's going to head back down and test support. It's someplace even as low as this bottom line in the bear wedge. It should eventually get there. I just don't know whether it's going to get there in one swift move or not. Additionally, if you look at after this gap up that took place on a Monday, if you look at the action that took place for the next 4 days, almost 4 days, almost, hate to say it, kind of looks like a head and shoulders top again. And we didn't get a back test, so a couple things could happen. We could we could rally up tomorrow, test that line, and then selling back down. Or if there's any bad on the employment numbers, selling could start the day off, and we sell off. Again, in any kind of technical analysis, you're not looking for certainties because you're not going to find them. What you're looking for is indications that something will probably happen. So if we get weakness starting off the day, then I think the markets will probably sell off pretty rapidly, and you could also make a slight case that this is kind of a, I don't want to call it a triangle, but you can see that this was the upper line up here, this was the lower line down here, and once that broke, you could really see that the selling began to accelerate a bit. From 1216 down to about 1206, 1207. Then a little bit of rallying, trying to get a little bit of something going, but it kept selling back down to test this line. So that is that's what's going on today. And again, we are. It looks like we're in this bear flag, and if we get a touchdown here, the question is, does this break or does it bounce? So that's kind of what I'm looking for right now. I believe we have made a top formation here, a short-term top, and that this 1230-ish level set yesterday is likely the high for the next probably week and a half. If this line breaks down here, then it may be the high for quite a while. But again, I am still open to the idea that the big picture is that this flag eventually has 1, 2, 3, 4, 5, 6 turns in it, and that 6th turn takes us up to test this neckline, which would be the ideal place to go short. So look, take care. Thanks for watching the video. I'm glad I could get one to you today. And again, come visit us at freechartvideos.com, where we use time-honored techniques to try to understand modern markets. Thanks again.